You just compare what's happening now to 2020 and 2021, you're doing yourself a disservice.
Let's not wait till the spring to see if rates come down.
That will happen. The question is, I review every single file before my processors touch it.
So I sat down with the legendary Zach Levesque from Northpointe Bank. He's consistently grown his brand over the course of, almost 20 years in the industry. Every loan that comes through Northpointe now, he actually physically can kind of underwrite it himself because of his loan process background. And it really gives the client, it gives the loan officer, and gives the realtors that they're partnering with a great experience. So yeah, Zach, I'm glad to see that you really got yourself put together today. You got yourself a haircut,
I'm very upset. I'm not looking my best. No, I'm kidding. Looking my best.
So, for people that are going to watch this today and they see that Northpointe Bank and Balkun Title do a lot of work together, and we sponsored a bunch of different events over the years actually. So Zach and I have known each other and started working together in 2007 at a bank that you were working at, in the branch manager at with Maverick Finance.
Maverick Funding.
Maverick Funding. So tell us how you got into mortgages. I know that wasn't your first stop. I know there was a stop before that. Zach also graduated from Quinnipiac, correct? And
correct.
Take it from there a little bit, yeah.
Yeah, so I've been in this industry since 2002, and it's funny, when I was young, everybody in my family, people that were around me, always said, you're going to be a banker, because I was always interested in finance, always interested in money, not having it, but how money worked, always interested in transactions. So although it wasn't really, it wasn't predestined, I had an opportunity right when I graduated college, as you mentioned, at Quinnipiac University. A friend of my father's owned a mortgage brokerage, and this is in 2003, I believe. And I went in, had a conversation, and I had no experience, and I talked, and they hired me, and I started my career as a mortgage originator, sitting at a desk, hammering the phone like everybody did in 03, 04, and 05. And it was kind of, trial by fire. And I learned a lot in a short period of time, and I learned, really, most importantly, that I really loved the industry, and I've never deviated from it. This is my 18th year in mortgage origination, and I think what's very unique about this business, the best part is you get to help people, especially buying a new home. It's a great moment in their life, but also every day is different. And sitting here, we have a combined 35 to 37 years in real estate. Every day, I kind of shake my head. I either don't know the answer to something, or I'm like, wow, I've never seen that scenario
That's
before.
the first time.
It's a very unique, fast-paced industry, but it requires attention to detail and accepting the responsibility that we have as on the title side and on the mortgage side. We have a real important responsibility in people's lives.
To our partners as well, right?
Absolutely,
so, the business has shifted from the 03, 04 days when I got in 04. We were probably doing a lot of refinances back then.
Mostly refinances.
And purchases were like a family member or something along those lines. And then when we really started solidifying our relationship was in 2007 and 8, when the market actually started going the other way, and we had to start creating different avenues to go ahead and create more business. And you jumped on board. I mean, obviously we had no choice, but we came up with plans of like doing education and
getting
networking parties, where none of that was really sexy back then, and getting in front of realtors and building relationships.
Now it's oversaturated, networking parties, but you talk about it, I think it was in 2009, we threw our first networking party, and it was for Maverick. I did it on a Friday night, which is not a good idea. I learned now it's not a good idea to do because people have kids. But we started doing it, and people were kind of surprised by it. But we had a really good showing our first couple events. I know you sponsored a couple. And what I realized quickly in this industry, it changes a lot, and you kind of have to reinvent yourself. But it also is so important to plug into the network and to work with true professionals. Balkun Title has a great name in and around Rhode Island, Southeastern Mass. Again, we talk about that responsibility. We want to make sure that if we have the opportunity to refer people, that the transaction is going to be handled, from A to Z, and every base is going to be covered. And that's one thing you guys do so well.
And I'll flip that right back at you, because a lot of people say, oh, why Northpointe? Like, what do they do so great? If you were to pick a lender, Dan, how would you rate them 1 to 10? And I always say 10. The one thing that I'm always amazed by is that how the structural background of corporate has transitioned from Maverick, I think, to Home Point to Northpointe Bank.
Yeah.
And I can tell you, I've been working with the same processors that you've had since back then. I've been working with the same underwriters that management was able to move those facilities, and I think that's what really sold them, or even vice versa, getting into new relationships with on the lending side, on the backside, because Northpointe processes like nobody else. I truly believe that, and I've stood by that for as long as I've known you.
Yeah, and I appreciate that. And obviously there's so many important factors in a loan, but efficiency and getting things done quickly is important. Getting through potential issues that occur during, sometimes you don't know that there's going to be an issue until there's actually an issue.
Yeah.
And everybody's got to get on the phone and figure it out. But I appreciate your insight there, and it's very accurate. And the reason we've remained efficient over decade, almost 2 decades, a decade and a half, is because although we've transitioned, like you said, Maverick funding, we went to Home Point Financial, and then Northpointe bought out the retail operations of Home Point, I don't know, about 4.5 years ago. We kept our team with us, and it was required for us to transition. We made it a requirement because it's so important. And if you've been in this industry for 5, 6, 7 years, you're a realtor or a mortgage person, you know how often people jump around.
Yeah.
We didn't really, we've only been part of 3 companies in a 17-year period, which may seem like a lot if you're not in the industry, but it's not. But the most important piece is that we kept our operations and we kept our whole infrastructure as we moved. And that was a requirement because you see people make moves to other operations, whether it's on the real estate side, the title side, or the financing side, and they don't really know what they're getting themselves into until they're sitting there on email, and then they can't get something done that they were able to get done at the previous institution because they don't have...
For maybe they got a little more basis points, or they've got and it's funny, as you're talking, all of these things are registering to me because, I felt like, I worked at some really good law firms over the years and title companies, and, when I opened up Balkun Title, I wanted to take some of those processes that
the best, right?
Yeah, and
I kind
of like that's what I made Balkun Title out of.
Yep.
And seeing that, so it's easy for me because there is a lot of in our industry, especially for realtors and or loan officers. There's they think the grass is greener, or they think like, oh, I'm going to go here. They have underwriting in house, or they don't have underwriting in house, or they have processing, and they. But then when they get there, it's almost like a roadblock.
Well, a lot of it is just, it's just like with anything. Like when you create a network of people that you trust, no matter what business that you're in, it's being able to pick up the phone and knowing who to call. A lot of that, you get part of this big institution or company, there's 50 layers. You don't even know who's going to make a decision on a specific thing. And in our industry, sometimes things that come across my desk that I have to figure out in like 2 hours, right? It doesn't happen all the time, but sometimes it does happen. I know the exact path I need to take on every single potential thing that comes up on a loan. Now, if I just jump to a new company and for whatever reason, and I have an issue, I probably don't even know who to call.
And that's important because, one of my last interviews we did with Nathan Clark, he talked about that too. So, he stepped out of selling real estate in 2014. So that gave him the ability, and we're going to get into this because I know that you've stepped back from origination. So when did that happen? And what has that allowed you to do for the branch, for your partners and others?
So the step back happened, I want to say 2013.
Well, it was that long. I thought it was before that. I mean, later, but
that's
wow. That's really...
I think it was around 13. It could have been 14. To be honest with you, I actually jumped back in when we had a big lull. And people were kind of, heads down. And if you've been in this industry a while, it's ebbs and flows. We're in a
weird little
ravine right now, which will level out when rates come back down. But I stepped away maybe late 13, early 14, and I did it because my goal was to build the team and to help everybody on my team grow, especially on the sales side. One of the biggest pieces of my job is to help people market themselves, get in front of people, and build and sustain new accounts. And I'm talking about originators, building networks for referral business. And me stepping away from originating allowed me to be able to focus on that, focus on building the brand of Northpointe. But also, most individuals that are in my position do originate for whatever reason. And sometimes it's hard to differentiate. So if I'm a branch manager that originates and does business and I have an opportunity, well, wouldn't I just keep it for myself? It just eliminates that gray area where I'm out to build business for my origination team and to build business and branding for Northpointe.
Yeah. So as we're sitting here now, you know, we'll harp on today's current market, right? So, you know, you and I have seen the ebbs and flows over the 15, 18 years. We've seen rates low, we've seen rates high, we've seen refinances, you know, so here we are now where last year at this time rates were what, 2.5?
It's high twos, crazy.
So where do you see, like, you know, it's tough to gauge because we don't have the crystal ball, but, you know, what do you see this year for, you know, consumers, you know, in the looking or to purchase homes or refinance homes? What do you feel, Zach, is going to be one of those leading indicators?
Well, we're in a weird time, and although as you mentioned, you and I have seen many ebbs and flows in the market, ups and downs. What's unique about where we are standing right now in this real estate market is one, rates are high, right? 3 to 3.5 points higher than they were at historic lows, and they went up very quickly and dramatically. And it's something that you turn on the TV and you see mortgage rates at highs. So it's something that's in people's face.
Gets in that subconscious a little bit.
But it's coupled with low inventory, which is rare. Usually as rates go up, people step away and inventory balloons. That's not happening for a couple reasons. And a lot of it has to do with people not wanting to list their house because they don't want to buy a house and pay a 6.5% interest rate.
Right. They go from a 2.5.
It's hard so they're sitting there, and maybe it's not the house of their dreams, but their mortgage payment's half of what it would be if they put a house at a higher level, higher price point. You might not love your house. Prices are still high, and there's some concern that pricing on homes is going to start to go down, which we'll probably see in 2023.
Sure.
A lot of people expect 10 to 12% decline in home values. I mean, nobody knows for sure, but most people agree that we'll see a decline in real estate in 2023. Maybe not in every area, but in most areas potentially. So if you're a seller, you know, and rates are 3 to 3.5% higher than what you're paying on your mortgage now, well, maybe you're going to wait. And if a lot of people are talking about the fact that they believe interest rates will go down in a year, in 18 months, maybe they just wait. Right?
Yeah.
So I think there's a lot of factors that are contributing. But again, what's unique? We have a low inventory market and a high rate market. And what we're looking at now is buyers that think that they have the upper hand and sellers that think they have the upper hand.
Yeah.
It's unique. And although we were in an absolute seller's market a year ago, it's starting to change. But I think we still don't know which way the lever is going to turn, right? I mean, what's your feeling on that?
I mean, so I think that, we've sold rates at 80/20s, adjustable rate mortgages back in the day. I still don't think, that theory of like a seller wouldn't want to go from 2.5 to 6. And inventory may be a problem. It's been a problem actually. Even when we were busy over the pandemic, inventory was still between.
It's a little higher than it was but it's still historically low.
So I think a couple of factors this year are going to maybe change that scale. I think one, inflation. I don't know if you're seeing it like on applications where all of a sudden, they could afford the 6% and the higher rate, but now their credit card debt has gone up higher. Or
their monthly payments are higher because interest rates are higher on credit cards, right? So monthly payments go up.
Right. So I've seen that, and the other thing that it's interesting to see is all of the pandemic stuff that happened, meaning all of the subordinations and all of the deferments of payments, because those were contracts. Like in Las Vegas right now, I use like the West Coast to sometimes gauge some of this. I mean, they're getting crushed out there, but they also have over 12,000 loan mods or deferment payments that were coming up in 2023. And the banks are gonna want you to start paying back some of that money. And I'm not sure with inflation the way it is, if people are actually going to be able to engage in that. We've seen credit card debt at an all-time high. Rates are somewhat high. So, an inventory low, which is, it's creeped up a little bit. And like for instance, in Las Vegas, they went from, which their normal low inventory was like ours, where we're at 1,000, they were at about 3,000, 3,200.
That was their historic low.
Right. They're at over 16,000 listings right now.
Really? So that's 5x. Which is higher than their average.
Correct. Yeah. So, I think that...
and I think that's, you probably have some second homes being listed.
Vacations,
vacation homes, people that might be a little overextended.
Not the same here, right? Not exactly the same here. So, I think as, rates will come down, it'll be interesting to see where we go.
And that's interesting. So you talk about Las Vegas. Danny Vegas. You talk about Las Vegas. that's a interesting niche market. That's not happening here. But I'm sure there's a couple other niche markets. And a lot of it probably has to do with, like you said, vacations homes, second homes.
Yeah.
Maybe people's that mods are coming up and they're like, I'm just going to sell this thing before the modification changes on the mortgage.
Still have equity in the property.
Yep.
So I think we might see that here where affordability may not be in the 6% rate, but it is where the people that even have the 2.5% interest rates, they can't afford the house just because of inflation and all the other
And here's
factors.
what's interesting. So if you're listening, if you're a seller or a buyer, right? So think about what you just said. Right now, we're definitely not in the highly skewed seller's market that we were a year ago. I think we're kind of somewhat in the middle, if I had to guess. Maybe a little advantage towards seller because of low inventory. But what happens if inventory balloons like it did in Las Vegas, in this area, in Massachusetts, in different pockets? And I'm not saying it's going to, but what happens? Let's say
there'll be some areas I think that'll be affected.
But let's say in 120 days, 150 days, inventory is up 4 to 5x in Rhode Island, and it's higher than normal. That automatically is a buyer's market. And I'm not trying to scare sellers. And usually there's a need to sell or buy a home. But the bottom line is when you try to get too cute and you try to play the market, when professionals and even the Federal Reserve does not know what's going to happen in the next year, you might find yourself in a position where you made a mistake. And I'm not trying to influence people to make buying or selling decisions, but there's no crystal ball. And we're in a very historic situation. We're in an economy and with inflation, low inventory, interest rates, nothing like this has ever happened before collectively.
Agreed.
Which means nobody knows what's going to happen.
I know. So we can't talk about like, in the spring it'll be 4.5% interest rates.
Yeah, I mean, most people,
I mean,
if I had to guess, and I've been saying this for about 6 months, I had initially thought rates would go as high as the low 7s about 8 months ago when rates started rising. My boss, Ralph Vidiello, said he thought it could go a little higher potentially. We saw low 7s for a short period of time. We're back into the mid to high 6s on 30-year fixed rates. So I had thought we'd see low 7s, which we have. Now they're back into the 6s. I also kind of feel like, especially with the election cycles coming up, maybe third quarter 2023, we might see a reprieve in interest rates. I don't know that for a fact, but my feeling is that is going to happen. Again, don't quote me, but a lot of people feel like, again, with election cycles, with inflation starting to curb, like most signs point to the fact that inflation is starting to get under control. But you pump gas.
I know.
You go to the market.
The litmus test, like the
I mean, everything is just so expensive. And that also, listen, that prevents people from buying homes.
Well, that's what we were talking about.
Because it's not just buying the home and affording the mortgage. Well, you gotta, what if you gotta put oil, propane, you gotta buy groceries, you gotta, I just built a house a year ago. And it never stops.
No,
There's just boxes everywhere, and it's all necessities, right? It's not anything luxury. It's like food and stuff for the baby, stuff for the dog, toothpaste. It's all expensive.
Yeah, it is. It's I laugh because my wife does a lot of the shopping, and I went to
all the shopping, Daddy.
Yeah, I know.
You don't do any shopping.
But we went. I literally
Kim, love you.
We started talking about working out and stuff previous to getting on camera, and I went to like Market Basket to get like a pound of low salt turkey breast.
It's like $22.
It was $15.99.
I know.
I mean, I remember it being $7.99, $8.99. Like,
and this is I went to Subway, and I'm not a fast food guy, and I did it on a whim. Subway, no offense, I don't love Subway. And I remember when they used to have like $5 footlongs, right? And I got a 6-inch sub, a bag of chips, and like a lemonade. It was like $16. Like it used to be $5 footlong. It's triple, and you get less.
But
I'm not trying to be negative, but the bottom line is inflation seems to be more under control than it was 6 months ago. But it is still not under control. The Federal Reserve said they will continue to increase rates, which will happen. So, I don't think we'll ever see 8s, but we could go back into the 7s. I thought it was going to
trend towards 8. I would have been more with
We
Ralph
still might
this.
go there. Who really knows?
I know.
I think the high point was, I think the Federal Reserve understands like the real estate market is functioning, but it's functioning on, about a half a gallon of gas right now. And I think they know if we get into the 8s on interest rates, it's just gonna, transactions are going to
without
slow.
curbing inflation, right? I mean,
correct.
We can keep the interest rate. I feel like rate isn't always the problem right now. It's more like the inflation part of it. That extra, $800 to $1,200 a month in dispensable income.
Yeah, and it's all consumer sentiment. That's why if you look at those polls, it's so important. Like consumer sentiment. We're getting back into flu season and COVID's back again, and people don't want to go out, people don't want to spend money, everything's expensive. So you get into that headspace of a potential person buying a home. They're thinking about all of that.
Yeah.
Well, is inflation under control? Well, it's not. So could it get worse again? Because everything's expensive.
Supply and demand too, right?
And listen, again, ebbs and flows, and I don't know when, but at some point we're going to sit back and say, all right, rates are down to where they should be. They're lower. Inflation is under control. That will happen.
Right.
The question is
When?
When?
Yeah. So, as we sit here, Zach, we've built great relationships with our realtor partners. We've helped grow them, we've helped educate them, we've helped sponsor them. I feel like we've taken that initiative over these course of these years. So, what do you see, Northpointe's strategy, or, what do we keep doing in 2023 to continue growing those real estate relationships?
I think, when the market shifts as it has dramatically, people forget the decisions that they made and the activities that led to their growth and their progression. I think people almost shut their mind off and don't realize that you still have to do those activities. You still have to work hard. You still have to spend money. You still have to get in front of people. You can't abandon those relationships. And I'm not saying people do that, but as I look around the industry on the real estate and finance side, I think a lot of people are walking around a little shell-shocked, and I get that. And, being in the industry as long as I have, I've seen bad quarters. I've seen bad years. I mean, if you were in this business in 2006 and 2007, if people asked me what I did, I'd say I was in finance. Like mortgage originators would be like,
stoned.
Stoned. I was thinking. So I've seen really bad years.
Right.
This was a bad second half of the year in 2022. I think it's going to be a very challenging 2023. I think the whole year is going to be challenging. But here's where you have to keep things in perspective. So if you're an originator or you're a real estate agent, if you look at 2020 and 2021, that was almost, I don't want to say an artificially propped up market, but it kind of was. COVID forced interest rates down to historic lows. So low, probably too low for too sustained of a period of time. And everybody was transaction happy. There was a million refinances. Everybody's doing transactions. There wasn't a lot of inventory, but things were just same day.
Yeah, you could take a purchase. Under contract. You could take a purchase and refi it. Well, if you did it at
maybe 2 months out.
Correct. 2019 and 2020 rates were about 4.5. All of a sudden, refinance, you were getting 2 or 3 transactions out of one sale.
So I think you have to keep things into perspective. And if you just compare what's happening now to 2020 and 2021, you're doing yourself a disservice. You have to be realistic. And I always tell this to our originators here. We're obviously down in transaction and volume from 2020 and 2021 based on our numbers now. But if you look historically further back in a more normalized market, 18, 19, the beginning of 20, we're actually very consistent with those numbers. It's just very hard to get that 2 years out of your mind because it was such a good year in volume for most people in real estate.
I have this pad in my desk. It's one of my, just a to-do list. And I've just put the years since I've been open, 16, 17, 18, 19, 20, 21, 22.
Get your eyebrows threaded, is that number one?
Always. And, get a haircut for a good interview. But, I started like how many title orders I brought in and how many closings I did. And that, what you just said is my 2022 number was right around the 2018 number, which was a good, steady flow.
And you can't discount those 2 years.
No, I mean,
but you have to keep that into perspective. And I think for people that are, attitude is so important in this industry, in any industry. Energy, attitude, how you project yourself, how you talk on social media. Like, social media is just negative in general. I've never said a negative thing on social media, but it's even more negative now. If you're a real estate professional, if you're a mortgage professional, keep your head up. Keep doing the things that got you to where you were.
3 or 4 years.
Keep doing the activities. Keep spending money. Keep getting in front of people. And once things do turn, which they will, you'll be in a much better position. Because if you just walk around, and with your head down for the next 8 months, you're missing so many opportunities to build business or to solidify business that you already have. We got to do. I come in the same time. Now listen, we have less transactions now. We're doing less volume. Everybody is, right?
Sure.
I come in at the same time. We're in the same thing. Work the same hours. Work my butt off. Do everything that I did a year ago. I am not changed. That's the type of person I am. I know that's the type of person you are, and that's how everybody needs to be.
I've actually feel like I've even stepped my game up. I mean, I've never did video before, you know.
Well, it gives you
Got
opportunity.
back into my seminars, which
Maybe have a little more time to execute
I
things.
do. I
Yeah.
obviously do because of less transactions. But you know, I've tried to use this time now to do something out of my comfort zone,
Yep.
right? So doing interviews and being on film, and you know, I always did a lot of education, a lot of public speaking, which you know, I've started redoing those. And for me, it's not about people like what's going on with short sales and distressed property. I'm like, it's coming, but we need to change our mindset first, right? So you know, let's not wait till the spring to see if rates come down. If they do, great. But if they don't, what did you do between now and then? So if you're shell shocked or you're sitting back 6 months. I mean, you know how long it takes 6 months of no pipeline to fill a pipeline?
Yeah.
It takes a while.
And the market is still functioning. There's still transactions happening. And naturally, it's like a survival of the fittest. There's going to be probably less real estate professionals on the real estate side and mortgage side and title side in the next 6 to 8 months.
Yeah.
There's not a drove of people rushing in to get into real estate. It's probably the opposite. It's like a mini exodus because it's harder. Yeah. It's harder to do transactions. It's harder to make money.
They came in, hit it quick, and then like, oh, I'm still, you know, I still have my degree, and I can still get a job making X.
Yeah. And if you've been, you know, I've been in this since 03. I've seen 4 or 5 market corrections. That's what this is. This is a market correction.
Yeah.
You know, and it will change.
Yeah.
And if you have that attitude, again, whatever you did a year ago, probably work a little harder, and you're going to be in a much better position in a year. To your point, like, I can't tell you if I work harder than I did a year ago because my days are just full.
Always, yeah.
They're just always full. So I don't know if I'm working harder. I can promise you I'm not working less. You know.
Yeah. So Zach, here's always the $1 million question, right? What makes one? I know you recruit loan officers, and you're always looking to add value to the Northpointe brand. What do you think you see moving forward? Like what makes a good loan officer? Like what do you prospect for? And is now a time for, you know, we can segment that into a second question, but do you think people would be good for people to get into origination right now? But I think the first question is like, what do you look for? What makes all the makings of a great originator?
So I think great question, and I think the 2 main ingredients for a successful originator, you have to look at it almost like there's 2 very important executions that have to happen. Number 1. The originator is talking to the ultimate consumer, right? The buyer, the person that's applying for a mortgage. They need to have a very deep understanding of programs, interest rates, how economics work, how finance works, because you're advising this person on probably the most important decision of their life.
Sure.
So an originator has to have an infrastructure of that knowledge, guideline knowledge, and be very serious about what they do when they come into work. So I think that's number 1 most important piece. Ability to understand somebody and their needs and the complexity of mortgage products sometimes. So that's number 1. Number 2, the other side of a mortgage originator is the relationships that they have with their referral partners. And a lot of our referral partners are realtors. You have to be a true partner to your referral partner, to your realtor. And we talk about this all the time. The relationships that our originators have here are real. They're not based on money. We do share in some, you know, lead spends if we're co-marketing on a letter or on a billboard. So, you know, that's a functioning, obviously, of the finance and real estate side. But we're true partners. We talk about goal planning. We help each other. We have ongoing communication. It's a real business relationship. And I think that's kind of what's missing across the board. It's what we really try to strive and try to educate our realtors on. This is not just you know, hey, call us when you have a buyer. This is a real relationship.
Yeah, we're building a platform, a plan, a business model. And I would say that you taking yourself out of that origination point has really helped and benefited any loan officer that's come here. I've seen, you know, I've seen what some of the guys that you've had, like Matt Resnick and Mike Quinn and Neil, guys that you've had since I've pretty much known you. And now I see like the Justin Conrads and the Sal Cohns and the Ferrer, like I'm starting to see these guys that have come here and their business models have completely blown up. And it's not just because of rates.
Yeah. Well, I think, you know, a good originator at an inefficient company can look like a bad originator. And a bad originator at an efficient company can make a company look like it's not a good company. I think it's very important to pair a good originator or great originator with a great company. So I think what's unique about what we do here, you know, obviously we're a bank. We have that bank infrastructure, all the products that we have that our competitors don't have because we're a federally chartered bank. I think that makes us unique. In my position here, we joke about it. And people will joke to me about it. Hey, are you shooting a video today, whatever? Because, I'm on the road show. I do a lot of promotion and branding and marketing. But what people don't realize is I'm in my office working on loans. So I do a lot of that, and I try to brand. I went to school for marketing. But I think if there's something that's important for people to know about me that they don't know, I look at every single transaction that occurs at Northpointe. You know that.
Yeah.
So before a file goes to underwriting, and most people, if you're out there and you don't believe this, sorry, it's true. I review every single file before my processors touch it, and it gets sent into underwriting. I've done that since 2005.
Yeah.
And the only reason I can do that is because I'm not originating and I'm not worrying about my own loans. I'm worrying about everybody's loans. So my role here, the branding, the marketing, helping our originators grow their business. The other side of it, which people don't see, is I'm in the office, I'm grinding, I'm working through files, I'm scrubbing files, I'm fixing potential issues if they happen. And I think when you combine those two things, it's the perfect environment for an originator to thrive and to continue to scale their business. And that's why you've seen that. And you've seen like a Justin Conrad and a Paul Ferreira who have doubled and tripled their business in less than 18 months in working. And listen, it's not because of me. It's because of everything.
Yeah, it's a good.
But I
team
do play a role in it.
Of course, of course you do, because I think that you hadn't stepped back, and then also kind of pre-underwriting the file. You can take it and like, hey, this doesn't look right. We need to do it this way, or yep, go with it, girls. You know what I mean? Like, and I'm sure.
And then they can focus. The originators can focus on their partners, new business.
Yeah.
And I'm the one. Usually, in a normal branch atmosphere, the originators have to get involved with those type of scenarios if there's an issue. I plug myself into that. So
trying to extract them
unless
out.
unless I need them, I need feedback. But
Sure.
that's an important role that I do that I know is very unique to the position.
Yeah. No, that's awesome. So Zach, I like to ask all of my partners that I've worked with for all of these years. So why Balkun title? Like, why Dan Balkun? After all these years, why do you continue to want to work with me? And what is it that you're able to show even some of the newer loan officers that come in? Like, what is it that works for you in the back end of your company?
Well, first of all, the likeness to Richard Gere with your silver, the silver fox.
Yes. That's
is an automatic yes. No kidding.
Zach also did give me the nickname, the facilitator, the
master facilitator,
the master facilitator,
which automatically caught my attention.
Yes.
When we first started doing business. But in all seriousness, we've been doing this for a while, as we said. From day one, you've always been focused on our needs, most importantly, the client needs, and getting things done the right way, getting things done efficiently. You get on the phone when you need to. If a client has an issue, texting, calling, accessibility to me is number one. Yep. Because as you know, and we've been through thousands of transactions, right?
Yeah.
Things can happen, and things might pop up a couple days before closing. Yeah. Being able to have access to a decision maker at the title company, super important, because there are some companies that you can't get the person on the phone that makes a decision. And I also think your passion and how much you've dedicated, whether it be financially or your own time, in helping people grow their business, originators, real estate agents. I can't say that I know of another individual or title company that gives as much as you do in the form of time, and also helping out financially grow people's business. And obviously you're involved in that as well, growing your brand. But I just think, I look at myself as a locked-in individual. This is all I do. This is all I will ever do, real estate. Right. You're the same way, right? Yeah. We're locked in. We wake up and we're thinking about real estate. Yeah. So I think that's really important. And if anybody is out there and they're thinking about doing business with you and they haven't, I would suggest that they give you a shot, because not all companies are created equal. Yeah. Not all banks are created equal. Yeah.
I think that's what differentiates us over these years. People will love to say good things. Some people like to chitter-chatter.
And also, if you're around for this long, there's probably some good. There's probably something good going on behind the scenes.
Yeah. Well, thank you very much, brother. I appreciate it. I love seeing you. Congratulations on the baby.
My suit's better, though, by the way.
Yeah, I know. We'll see about that. But I did dress to impress today, because I knew I had to step up my my dress game today.
Well, appreciate the time. Love you, brother. And let's all keep our heads up. Yeah. You and I will, but everybody out there, keep your heads up. It's gonna turn. Just work hard. Be positive.
For two people that have close to 40 years experience in the business, we continue to grow together as a team, but to actually listen to him speak in a business mentality was very inspiring to me. We like to help, we want to help grow, and we want to raise awareness in our communities.